Thanks for tuning into the channel today, guys, to Wise Guys Crypto. I appreciate you watching it all the way through. There's a lot of good, juicy news that we're going to be going over to educate ourselves more on the crypto industry and what we're invested in. So it's good to not tunnel vision into specific coins and look at the whole thing as one big pie, because tunnel vision in a specific coin or a specific thing can be a good thing, but can also hurt you if you don't see the wider perspective. The Bank of England to ramp up talks on crypto rules as data is hard to find, report. International cooperation is required to gather the information needed to evaluate crypto risks to the global financial system. This was written on December 19th, 2021. The Bank of England is facing challenges in finding the information it needs on institutional exposure of crypto and plans to ramp up the pace of international talks on establishing a regulatory regime for the assets, the Sunday Times reported. The growing number of banks offering crypto trading and custody for clients requires global rules to protect the financial system. According to Sarah Breeden, the Bank of England's executive director for financial stability, strategy, and risk, the newspaper said. BOE is short for Bank of England, so I'm just going to say BOE from now on. Gathering the requisite data is not something the UK can achieve alone, she said. It will need cooperation through the Financial Stability Board, a G20 organization that makes recommendations regarding the stability of the global financial system. The BOE has repeatedly said, most recently, just last week, that crypto holdings in the UK do not currently pose a threat to the financial system. It expressed concern, however, that the pace of growth means that they could become more dangerous as they become increasingly linked to the wider financial network. Crypto attracts more money in 2021 than all previous years combined. Crypto attracts more money in 2021 than all previous years combined. Bloomberg article from December 19th, 2021. Need more proof that this is the year digital assets went mainstream? How about the fact that venture capital funds have poured about $30 billion into crypto, or more than in all previous years combined for the little more than decade-old technology. That's almost quadruple the previous high of around $8 billion in 2018, or the year following Bitcoin's more than 1,300% breakthrough gain, according to transaction data compiled by PitchBook Data Inc. We've moved just beyond the digital gold. We've got financial services, art, gaming, and subcategory of NFTs. Web 3.0, decentralized social media, play to earn, all of that made investors think we don't have enough exposure, said Spencer Bogart, general partner of San Francisco-based Blockchain Capital, LLC, one of the largest investors in the industry after financing more than 120 companies since its inception in 2013. As other established firms such as Coinbase Ventures, Digital Currency Group, and Polychain Capital bet on the next big crypto thing, all manner of experimental projects, a social media app that turns celebrities into tokens, a play-to-earn, non-fungible token game inspired by Elon Musk, or a collectible consisting of a list of words, secured funding. Investors are funding anything and everything, PitchBook analyst Rob Lee said. The sudden emergence of what was once considered a niche sector such as NFTs showed investors what they might be missing out on, according to Bogart, noting how the once obscure online non-fungible token marketplace OpenSea is now drawing comparisons to the e-commerce site Etsy. The $30 billion tally includes fundraising rounds raised by the likes of Robinhood Markets Inc. and Revolt Ltd. Revenue generating financial technology companies that merely touch crypto, but looking strictly at U.S. venture capital transactions also shows outsized investing this year with some $7.2 billion in deals, 4 times the previous record set in 2018, according to PitchBook data. Stablecoins could be super useful if they're properly regulated, according to Federal Reserve Chairman Jerome Powell. This article was written on December 19th, 2021. Stablecoins are increasingly being taken seriously as a potential part of the U.S. financial system, though how the digital assets should be regulated is still being debated by officials and industry leaders. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated, Federal Reserve Chairman Jerome Powell said at the Federal Market Open Committee (FOMC) press conference on Wednesday. As of right now, they aren't. Quote, as of November 10th, the top 4 stablecoins, Tether USDT, USD Coin, Binance USD, and DAI, commanded a market value of $128 billion. They have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist, Powell added. You could have a payment network that was immediately systematically important that didn't have appropriate regulation and protections. The public relies on the government and the Fed in particular to make sure that the payment system is safe and reliable, as well as the dollar to provide a safe and reliable trusted currency. What are stablecoins? Stablecoins are cryptocurrencies that are usually backed by a reserve asset. This secondary asset helps the currency maintain price stability, unlike other forms of cryptocurrency, such as Bitcoin USD, that can see high levels of volatility and more extreme swings in prices day to day. As a result, stablecoins can be useful as a store of value or medium of exchange, and because they work through the blockchain, they can move very rapidly between peers without having to go through the kinds of intermediaries that slow down traditional bank transfers. Many of the most popular stablecoins like Tether and USD Coin are pegged to fiat currencies like the US dollar, cash equivalents, or other assets like gold. Other stablecoins are backed by cryptocurrencies. MakerDAO's DAI, for instance, is tied to Ethereum USD. 3 reasons why Solana price could see an additional upside in 2022. Steady ecosystem growth, institutional investment, and a healthy derivatives market are strong signals that Sol will continue to be a top contender in 2022. Solana has become a top contender in the smart contract industry, and in the past year, the network's total value locked, TVL, grew by $660 million and stretches across more than 40 decentralized applications to hit an all-time high above $11 billion. Even with this growth, investors have reason to question whether the $56 billion market capitalization is justified and how it compares to competing networks like Binance Smart Chain, Avalanche, and Polygon. Not sure why they don't mention Cardano in that, but this is coinanticardanoTelegraph.com. By analyzing the past 6 months' price performance, there's an apparent decoupling from Terra Luna, Solana, and Avalanche when compared to other smart contract platform competitors. Yeah. Solana's market capitalization is more than double that of Avalanche and Terra Luna, each of which have a $26 billion market cap. Searching Solana's latest news on Cointelegraph yields an exciting array of institutional investments, ranging from the $314 million private token sale by Solana Labs in June to an $18 million fund raised in September by Solana's DEX project Orca. There's solid evidence of a growing ecosystem, judging by investor appetite. However, to understand how successful Solana's scalability solution is, we have to evaluate its usage metrics. Ethereum's leading DApp by active addresses is Uniswap, which has 188.2 thousand addresses. Therefore, Radium's 97,600 weekly users is rather impressive, considering it was launched just 10 months ago. Meanwhile, back in February 2021, Uniswap already held over $4.3 billion in total value locked. As for Solana's NFT marketplace, Magic Eden, its 58,400 weekly active addresses also account for more than half of Ethereum's OpenSea. The sector absolute market leader in volume and users activity. Avalanche users actively is highly concentrated on the Trader Joe decentralized finance app, but its $715 million weekly volume pales in comparison to Uniswap's $22.1 billion or Radium's $12.5 billion. The same can be said by Polygon, which has $573 million in trading activity at its QuickSwap DEX. Solana has the third largest futures market. Solana currently holds the third largest futures open interest, which is the most relevant metric in derivatives contracts. This indicator aggregates the total number of contracts held by market participants, regardless of the recent trading activity. Despite the sharp drop since the November 8th peak at 1.9 billion, the current 860 million futures open interest ranks Solana the third derivatives market by size. For example, Binance Coin BNB futures holds 520 million, followed by Terra Luna with 430 million. Solana leads in total value locked, users and derivatives markets. Undoubtedly, there's an impressive amount of activity coming from Solana's on-chain data and derivatives market. The network's TVL increased by 15x over the past 6 months, and Solana's dApps users is nearly half the amount of users on the Ethereum network. Solana seems to be quickly closing the gap in 3 important metrics: total value locked, active users, and derivatives markets. Competitors like Terra Luna, Avalanche, and Polygon seem a long way behind, which possibly justifies the market capitalization premium. Well, that is it about the Solana news. I wonder why they always fail to mention Cardano on Cointelegraph specifically. It seems like they always only post negative things about it. Sounds like whoever's writing these articles has a bit of a vendetta against the ADA network, which I don't understand because ADA's got like $40 billion that's staked in the network. If you want to talk about total value locked, that is $40 billion in total value locked actively staking right now. That's a lot of money. Surprised why they don't mention that, because Cardano's bigger than Terra Luna, Polygon, and Avalanche. So I'm not sure why they seem to ignore it, but they won't be ignoring it soon. It will have no choice. Traders delay 100K Bitcoin prediction, but still expect a blow-off top in 2022. $100,000 Bitcoin is probably not happening, but analysts are hopeful that Bitcoin can end the year above $50,000 and kick off early 2022 with a new all-time high. Bullish traders that drank the Bitcoin to $100,000 by end-of-year Kool-Aid are now coming to terms with the fact that they may be no Santa Claus rally to wrap up 2021. At the moment, the pipe dream has morphed into simple hopes that the top cryptocurrency can at least finish the year above 50K. Data from Cointelegraph Markets Pro and TradingView shows that the bounce in price seen in Bitcoin following remarks from Federal Reserve Chairman Jerome Powell has pretty much evaporated over the past 48 hours. The price has swept fresh lows at 45,500, and from the look of things, the price could drop even further. Here's a look at what traders think about Bitcoin's current price action and what could be in store for the remainder of 2021. Bitcoin's consolidation mirrors May's price action. Pseudonymous Twitter analysis Rect Capital compared the current price action to the consolidation seen in May through July. I'm looking at the chart now, and to be completely honest, it looks totally different, but that's what that guy sees. I don't know what that accomplishes, but that's it. Bitcoin is still consolidating inside these 2 key bull market EMAs, just like in May 2021. If a similar pattern were to play out, the Bitcoin price would continue to consolidate and drift lower for another 68 weeks before resuming its uptrend. Nobody knows what's going to happen. But this is a possibility. This could possibly happen. It's an analytics take, and if there's 1,000 people making charts, well, one of them people is going to be right? So somebody's going to be right. Let's see. 44,000 could be the bottom. A similar scenario was forecast by Cointelegraph contributor Michael Vanderpump who posted the following chart outlining a rough sketch of how Bitcoin price could unfold over the next couple months. So it looks like he drew some like really nice squiggly lines right there, right here. Yeah, and that could possibly play out. It looks legit. It looks legit. Definitely. This could certainly play out. I would love to see this. I would love to see this play out. I don't know if we're going to go lower though from here. It's possible. It makes sense, but the problem is that everybody's expecting us to go lower from here, so we might not actually. Seems like everybody's expecting us to go lower from right here. So I think we're going to start pushing up. I don't think we're going to go down. That's just my personal opinion. It could be an excellent time to buy cryptocurrency, your favorite cryptos to stock up on right now. I think that there is going to be a Christmas rally because right now everybody thinks that there's not going to be a Christmas rally. So that's just my bet. Based on the chart provided, Vandepop sees the possibility of another drawdown to 44K range, which will be followed by a return to the current levels for a brief consolidation period and then a resumption of the uptrend. Swings in sentiment don't change the underlying strength. A final bit of insight came from the cryptocurrency analyst TechDev, who posted the following chart detailing a more macro view of Bitcoin's price action after each halving cycle. Now, this actually looked quite interesting to me, guys. You can see back in 2013 bull market rally, there was a kind of a double pump to the third pump. It was like one pump, two pump, three pump. And back in 2017, I actually did the same thing. One pump, two pump, three pump, boom. And if we look here, we're at one pump, two pump, boom. I could see a three pump coming up soon. I just so happen to be putting my cursor around the $200,000 mark. Look out, everybody. Look out. If Bitcoin starts pumping and reclaiming its old all-time high, hit 70K, 80K, 90K, you're going to see people FOMOing in like you've never seen before. I still believe that. And Bitcoin price could double from here in less than 2 weeks. Bitcoin can go from 46K to 90K in 2 weeks. I've seen it happen before. I saw Bitcoin back in 2017. It went from about 5K all the way up to 20K in like a month and a half. And that was back then. And because there's so much more mainstream adoption and people buying into it and more people know about it, it could pump even faster than it did back then, even faster. Despite multiple swings in sentiment over the past 2 weeks, Bitcoin is in the same macro position. Okay guys, well that's pretty much it for the video today. You could see that we're kind of just trending sideways and down a little bit. I'm not really concerned because I'm in this for the long game. Bitcoin's gonna crash 1,000 times, but over the long term, it'll never go down. Remember that. Remember that saying. Bitcoin will crash 1,000 times, but will never go down. Every day that the Federal Reserve prints more US dollars and more people begin to adopt cryptocurrency and wake up to what's really happening to their currency, Bitcoin will always go up in price. If we go back in time and look at what happened to all great nations, they ran out of money. They ran out of money. That's what brings every great nation down, and I would hate to see it in the United States. I don't believe that the United States is going to go down. However, there is an extreme caution on the US dollar and its stability in the long term. Over the next 5, 10, 15, 20-year forecast, I predict that that US dollars will hyperinflate and Bitcoin price will be well over millions of dollars each in the next 10 years. That is my price prediction. I think Bitcoin's going to be over $10 million in the next 10 years. Because every day they print more US dollars, the price will go up. And I could see a well over $30 Cardano by that point also. But it'll only feel like a $5 Cardano because of inflation. Don't compare yourself to people that started before you. You're on your own journey. Remember that, guys. Well, thanks for watching the video all the way through and watching Wise Guys Crypto. I will talk to you in the next one, and peace.